I'm Anuj Chaudhary, and welcome to this week's commodity forecast, wherein we analyze what's driving commodities this week and what it means for prices ahead. If you do regularly track geopolitical developments and their impact on commodity markets, then this video will make for essential viewing. In today's video, crude oil and copper will be in the spotlight. So stay tuned till the end for crucial support and resistance figures for both these commodities. Let's start with macroeconomic headlines. The Government of India has placed imports of silver bars with 99.9% purity and all other semi-manufactured products and powder under restricted category with immediate effect. The measure was taken as India spent nearly $12 billion on silver imports in FY26, up 157% from FY25 in value term, and volumes of imports jumped to 7,335 tons, up by 42%. The Chinese economy slowed sharply in April as retail sales and industrial production cooled while fixed asset investment contracted again. Supply shocks emanating from the Middle East conflicts will intensify the longer the Strait of Hormuz stays shut, and consumer sentiment is at risk of further worsening as high oil prices spilled over into higher costs across goods and services. Furthermore, China's credit growth continued to disappoint in April amid ongoing deleveraging, posing a significant drag to the investment outlook. Higher energy prices, without any resolution to the Strait of Hormuz, triggered global bond sell-off as over the inflation outlook came to the fore. Yields jumped higher and steepened across the curve, but most notably, the 10-year yield surged to a yearly high of 4.59%. This comes as markets now start to fully price in rate hikes from the Federal Reserve in 2027, although nearer term pricing remains little changed. German bonds were also swept up in the action, with the 10-year yield surging 12 basis points to 3.17%, the highest since 2011. Gilts saw added selling pressure from political uncertainty following local elections last week, with the 10-year yield up 18 basis points to 5.17%, the highest since 2008. Across both jurisdictions, markets' expectations of ECB and Bank of England rate hikes has continued to firm up, with another two expected from both the central banks this year. The Trump and Xi summit concluded with the potential trade agreements, especially on agriculture, and some mutual tariffs cut, although specific details remain unclear given the differing meeting readouts by the US and Chinese authorities. For this week, we will cover the NAHB Housing Market Index on Monday, May 18th. On May 19th, we will cover the ADP Weekly Employment Change and pending home sales. On Wednesday, the May 20th, we will cover the FOMC minutes for April 28th and 29th. Commodity focus. Crude oil. Crude oil prices surged last week. It opened the week at 9,083 and touched a low of 8,900 at the beginning of the week. Thereafter, it rose sharply to hit a high of 9,743 towards the end of the week and closed the week 10.89% higher week on week at 9,685. It breached the 10-day EMA during the week and gave a decisive close above the same. The MACD is showing positive divergence along with a positive crossover. It is trading in a rising channel and hit a fresh contract high earlier today. We expect crude oil to trade with a positive bias in the medium term. It may find initial resistance at 10,447, which stands at the 127.2% Fibonacci extension, and strong resistance at 10,700. Support is seen at 9,525 and strong support at 9,350, which is near the 10-day moving average. A breach below the same may lead to a trend reversal. The price indicator is bullish. Commodity focus. Copper. Copper prices surged in the former half of the week and reached a high of 1,414. Thereafter, it witnessed profit booking in the latter half of the week, erasing most of the gains and closed the week modestly higher at 1.26% at 1,341.60. It formed a gravestone doji at the top, followed by two red candles confirming a bearish reversal. It has also broken the 10-day moving average and closed below the same along with an ascending trendline breakdown. The momentum indicator MACD is falling towards the center line along with a negative crossover, signaling further weakness in the red metal. We expect copper to trade with a negative bias in the medium term. It may find support at 1288 and strong support at 1235. Resistance is seen at 1367 and strong resistance at 1387. A sustained close above the same may lead to a trend reversal. The price indicator is bearish. Weekly price action. Gold fell by 3.71% week on week. Silver fell by 5.4% week on week. The gold-silver ratio rose by 1.79%. Base metals slackened again with the exception of zinc and aluminium. The weekly event calendar. This week, markets will track industrial production year to date, ADP weekly employment change, S&P Global Eurozone manufacturing PMI, initial jobless claims. That's your weekly commodity forecast from Mirae Asset Shirkhan. Do you think precious metals and base metals can recover their streak? Share your thoughts in the comments. To help you keep track of other market developments, all our research offerings are now available in one portal, the Mirae Asset Shirkhan Research Center. Explore research calls and detailed research reports across equity, mutual funds, F&O, commodities, ETFs, and more. Scan the QR code on the screen to kickstart your wealth creation journey backed by experts, or sign up for a 15-day free trial if you aren't a customer. Thank you for watching.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.